Hi, this is Jason Sen from DayTradeIdeas.com for ntmarkets.com. It's Wednesday. We're looking at daily chart of the mini Dow Jones. You can see just in this corner here, I'll try and open the chart up a little bit. Daily chart, we had a high last week, 155.23. We spiked high yesterday, caught me out I must admit, but we spiked high to 155.08, so we stopped just a fraction below last week's high. Last week's high was a spike which wasn't maintained. Yesterday, similar sort of situation, although we closed up on the day, it's still backed away quite aggressively from the high of the day. So it's a little bit of a double top pattern there, which is sort of backing up the fact that we're overbought on the daily stochastics. And perhaps we're going to see some profit taking now. Nothing, not a huge sell-off, nothing in the way of a huge dump, I don't think, but certainly some profit taking after such a good run. It's probably about time. Target wise, we're using Fibonacci's here. We're looking at 147.94, so 148.00 area, and that actually ties in quite nicely with the previous high here that we had in April. Middle of April at least, or maybe that actually was the high for April, 148.23. So the low 148 area looks like a reasonable target for some profit taking, but that would also act as very good support and could probably be a good buying opportunity if we were lucky enough to see it down that far. Look at some currencies. Start with the euro versus the US dollar. This is a daily chart again. It goes back to last summer. This looks a bit like a head and shoulders. I wouldn't really call it that because it's not. If I scrunch this up, it's not at the top of a big bull run. This recent rally has only just been a correction, as you can see, from a larger move down from the middle of 2011. So although it looks like a head and shoulders, that doesn't really count, I don't think, because it's not at the top of a big bull run, as I say. However, having said that, it's still a pretty negative pattern. We've been downtrending now for most of this year. We've managed a small recovery, but this brown line here is the 100-day moving average. We've never really managed to get through it. A couple of days we gave it a good go, but we've held below. The black line here, which I'm trying to highlight, is the 200-day moving average. We've been hovering below here for the second half of May now, ever since we got below it in the middle of May. So really the general picture is quite negative. This red line here is a trend line, which on a head and shoulders would be the neckline, but it's still relevant for our purposes. Comes in around the 128.00 area, 127.90 area. So a break below here, and it's going to trigger all sorts of sell stops, I would have imagined. This general picture is just not very bullish. Where can we go? Well, breaking 128.00 takes us to 127.46 probably fairly quickly. That's a low seen, that's April's low actually. And then that's not only April's low, but it's the low for this year so far. So if we break below there, that 127.40 area, we might see 126.60 area quite quickly. That's a low in November of last year, and then we'll just continue south. So not looking particularly positive for the euro here. Staying on the Forex theme, we're just going to run through the dollar versus the yen. It's obviously had a good run up. We've been watching this almost every week, really. 102.97 was a big Fibonacci longer term level, in fact, going back over 13 years. We managed to close above it for 1 week only. 103.31 was the high. The next week we managed to get all the way up to 103.74, so a good, sort of 70, 80 pips above that level, but on the grand scale of things, that's not a lot, and we closed a lot lower last week. So a key reversal week, backing up the potential for a top here at this big Fibonacci resistance level. We're very overbought weekly chart. There is a risk of some profit taking now. We're already heading lower. We've got the 9-week moving average at around 100. So watch that 100 level. If we break lower, let's put some fibs on here. We could be heading towards a 97.5 area, but that would be very good support and probably a good buying opportunity. Again, we're not expecting an out-and-out collapse for this just yet. Thanks very much. Jason Sen for ntmarkets.com.